The broadcast is now starting. All attendees are in listen-only mode.
Recording started here. Okay, so welcome everybody. It's the nightly strategy podcast, Count It Towards Capital. It's April 20th, 2020. So here's where we were yesterday. I should say Friday. We had just pushed through the top of the 10-day high, had gotten out of the river, looked promising going into the weekend and closed well. We drew these lines on to suggest that as we were coming to what looked like a second leg up, that it would have to maintain that same pace of recovery and stay to the left-hand side and above this rising slope of the RL30, which is, you can see, is a very orderly move, and that when price can no longer stay on that same side of that 30, that it can often start to signal the change of direction. You can see that happen here, that shortly after price crossed, then the RL10 crossed, then you had the RLXD, then the dragon stopped failing, and the dragon started to roll over, and then the 30 rolled over. And then we got into this long move. Well, we can start feeling our way forward through the fog by projecting the slope line of that RL30 forward. And so, like, if I was going to project when it should cross this decaying fair value, then I would be somewhere out in here, like about 4 or 5 days from now. If it were to maintain that same pace as the first two legs up, if we call that basically two legs up, then it should be crossing that fair value line somewhere up in here. If we were more relaxed on it and said, let's give it the PSAR amount of room, then extending that slope of the PSAR looks something like this, and it would take it up into here. Similarly, we could also draw the dragon. So there we were in the summer, had a nice close, and then the futures started strong and then flipped over, and then what we ended up having today instead was a gap down. Then it made a run back towards that 10-day high and trying to getting into this no man's land where there's no real resistance, as we've said, in which case that we wouldn't be surprised for it to achieve that 303 fair value. Instead, what it did was it ran up, didn't quite make it, and then sold off sharply in the afternoon and closed near the low of the day, and resting just above the northern skin of the dragon. So this was kind of a rejection of that resistance. You know, the last resistance before it can get through is really where we're at right now, when it rejected that pretty soundly. Oil got smashed today too. And then a lot of the infrastructure stocks we're going to see that had been part of this move up also suffered today. So I kind of like this little idea of extending these trend lines, so I added another day to it. So this is the Dragons extension right here. This one is the RL30. Now, one of the things that I noted in the closure report in the speed run was I want you to notice that the upward slope of the RL30 is stronger than the current slope of the dragon. So what that means is that the 30 period acceleration is stronger than the 10 period. That means this move is starting to run out of gas. Now, why is that? Well, because this reversal here, the first leg up, was actually pretty sharp and steep. and made this RL30 slope around. But then this sideways chop here, 3 days back and then 4 days sideways, followed by another 5 days of not much more improvement, is causing the 10 period to be a little flatter upward slope, as indicated by the extension of the dragon, compared to the longer term turning momentum of the 30, and which is almost paralleling the slope of the PSAR is almost in between those two. So what I would say is this is evidence that the second leg is, and you can tell visually, the second leg visually is not as strong as the first leg up, which featured really 3 or 4 days in a row of really strong initial surge off the bottom, and then it's kind of mucked around in these smaller laterally steps. So it seems to me that the RL10 is the one that looks more like the dragon is the one that looks more like the sustainable support. So to me, the bottom skin of the dragon is really why that is an important support level. And that's why I've highlighted that one in thick red as very important support. That's the width of the dragon now is the room to play. So that's what those 3 lines are and how I'm feeling my way through the interpretation of that. So that is kind of an artful judgment or a sensing of the, I'm trying to feel the psychology as I project those lines. I'm trying to add sense to what the mathematics is describing. The mathematics are objective. The interpretation is the subjective element of this, and I'm trying to use that interpretation to help me appreciate or feel my way through the psychology of the market as expressed by these trend lines. Now we have other things that we can use to do that with, like the positioning of the risk Z, where we are inside the 1 day, the 10 day, the 30-day range, price with respect to the weekly opening, where we are in terms of the psychology of the sell-off. We can see later, the MACD histogram and the 4 seasons will give us some ideas about psychology. So all of those things blend together in what Robert Gardner used to call the mosaic approach to interpreting what's going on in the market. So this is me feeling my way through this market condition. So we're still near the top of the 10-day. It was 1 day of orderly selling. There was no evidence of panic selling, but it did kind of close decisively that when the guys started getting out of their leverage positions in the afternoon, it collapsed pretty quick. There was not a burning urgency to buy. And it was really the guys who tried to push it through the 10-day high and above Friday's high that failed. And when that broke, it fell off pretty sharply into the close. We will see, however, when we look at VXX and the speed run, when you look at VXX speed run, which is part of that closure report that's already posted to Patreon, I'm getting pretty efficient at that now. You'll see that there was not a lot of spikes into volatility. So this is more like intraday tactics. Guys made a run at it. It wasn't there, and they decided to get out of it. And so this didn't feel like a panic reversal in as much as failed test number 1 of this week. Now, you start stacking a couple more days like that together, and it gets through the dragon and breaks this thick red line, and then tests the Bollinger Band mean. That would be the least surprising move of all. And then you would start to see some kind of sideways quiet channel being developed inside this 10-day range between like 287 and about 257. So a $30 trading range on 290, which is about it's about an 11% range inside here. Still considerable volatility, but that feels like the tactical zone right now between this breakout above the RL10 and then this strong support level at the 10-day low. That seems to me to be the region in play. Now we got some of these pressures trying to encourage the market northward, if you will. Okay, so we remain in the summer. We're above the Red River. We have a long side bias. There's not much resistance overhead. If it can break through that 10-day high, which it could easily do tomorrow, then we could see some days like we saw here, and even some of these days where there was that open and then a strong move into a close, and that would remove all of this hesitation, and that would turn the RL10 up, which has just started to peak right now. So we're not in danger yet, but that was like strike. That's like taking a pitch. That's like strike one. Okay, that's how I'm interpreting that. Inside the marketplace, the sector. So the S&P was at 1.8. Things that were better: Home Depot, Walmart, Caterpillar, fractionally better. Japan and Asia, Brazil and emerging markets, small caps. So a lot of the more speculative ones did not lose as much as the S&P, but still they were not much to really be positive about. The few things that were positive: Treasuries, Cisco, silver and Wheaton, and then the triple inverse oil, because oil got smashed today. That was up 16%. Things worse than the S&P: tech, finance, Mexico, the Dow, basic materials, energy. I think finance was in there. So all of the things that had been part of the recovery did not really follow through worth a crap today. Even Gilead Sciences, which had that had the big boost on Friday because of the promise of therapeuticals, got smashed today too. So not so much follow through today. Things that were to me foreshadowing of things to come: a breakdown in Simon Property Group and the commercial real estate, and then real estate itself, IYR. Commercial property down 3.3 and real estate down 4.0. And then you have Wynn, Cliff, U.S. Steel, lumber, all of those basic materials, those symbols worse than the basic materials themselves. So there was an underwhelming performance, a lack of confidence in those, saying this is going to be a long grind. We are in the grind right now. So in the lack of evidence for a panic sell-off and no real follow-through from the usual suspects, today was kind of a gloomy Monday to get things started. So we didn't record this as part of last Friday's. This was the last question and answer session, but there was a discussion about did I expect a sell-off and a second leg down or a third leg down. I said, well, I'm not going to predict, but all of that stuff is baked into the cake in a very fragile market. And when you look at these kinds of price levels, all of those price levels already kind of show the tripwires, the early warning signs for adverse moves. So there's at least 5 warning signs that would lead us down, beyond the excursion past the Bollinger Band mean, including to me, the very important 10-day low. Now, if you look back through the previous 10 days, you're going to recognize that the 10-day low is going to start rising as we get. So tomorrow, the 10-day low is going to be up here around 263. So there's almost a time series factor on what have you done for me lately using the 10-day low. By the same token, the 30-day high has come down from up here, has now come down to below this resistance zone. So there's now actually some resistance between us and getting into this free and clear. So the 10-day and the 30-day look back ranges, looking at those high and lows, just the geometry of it, there's almost a time series function built into those when you pay attention to them. And those are important to me on swing trade basis. Okay. So that's what I wanted to say about those. I posted the 6 blanks that I'm going to go through now into Patreon as a way to do a check on learning for yourself. What I would do is I would look at those and then say which of the charts really jump out at you and say, oh man, that's one that I that I really am disappointed I didn't get, or man, that's one that I really like. I really want to get that. That will help you identify the kinds of moves that your inner trader brain really is favoring, the kinds of things you want to look for. And so the way you start training your mind for pattern recognition is look for the kinds of moves and the symbols that you like, for the kinds of moves that it can make, the kind of things you want to tap into. And then rewind that movie back to the kinds of preconditions that give you insights into what were the setups, what were the filters, what were the early warnings, how did it transition from one state to another prior to this thing taking off, how was the garden prepared so that this thing was ready to grow and go the way I wanted it to, and then what were the signals that told me that this thing had actually started to move out. That's how you come across things like the super pinch, the Z3 pinch, all of those things that where the market conditions prior to the move start jumping out at you. And that's how you can use you can train your mind to be looking for the things that get your attention, the aha moments. You're actually adopting a disinterested point of view, and you're really watching your mind watch the charts. So there's some part of you that is aggressive and seeking and looking and grasping and wanting. The trader, the hunter, he's hungry. And then the second part of you is the scholar, the observer, the recorder, watching for the kinds of things that your mind notices only for the purpose and the intention of recording what the reactions were in the moment. So I learned this technique back in my special ops days, back in Panama. I was assigned as a liaison officer into the Special Ops Task Force in Panama during Operation Just Cause, in the hunt for Noriega. And in that room, all the senior commanders of special operations units of all types were in one command post. And so they all had radio sets to talk securely to their maneuver forces. And the commander of the Special Ops Task Force was in there receiving the reports from all these different elements. And collectively, they all provided capabilities for this simultaneous seizure of critical aspects of the nation and to do the regime change. Well, inside that command post, there was one guy in a little suit and tie and glasses on, and all he was doing was just taking notes and recording and keeping a timeline. And so he wasn't listening to a radio, but what he was doing was taking a record and a narrative of everything that was said and wasn't said, and the feelings and the getting the operational timeline, so that after the operation was over, because we were going to win, there was no doubt in our mind that that was going to be the case, and it was so important to get better that they were using the actual operation also to discover the training value. What did we do so that we could study how we did it to make sure that we could get better the next time we had to do it. And so even in the heat of the moment, in the middle of a pretty complicated special operations mission, the special forces were all keenly aware of the responsibility of taking notes and documenting what was going on in order to come back and subject that to analysis and after action reviews and thorough debriefing and what if drills and seeing if we were following the rules and the SOPs. And so I learned an awful lot from that. I had learned a lot from growing up in the Rangers and my own special ops experiences, but then to see that at the operational and command post level gave me new insights into what it takes to really be effective in a high risk, low to no margin for error kind of an operation there. The importance of documenting your decision making, and then going back later to check against the rules to see if it was see if we've been performing to standard. No matter what the outcome was, did we follow the rules, and were we playing correctly? So that kind of analysis is crucial. And that's why I place the emphasis on this kind of, replay of the charts, so you can see, because you can see things afterwards when you're out of the heat that you can't see when you're in the middle of it. There will be things on the chart that you just say, oh, I never saw that before. That was Glenn's recent experience just from last week when he did that with his version of the charts and compared his study of what his rule said he should do compared to what he actually did, and now he's comparing that to the set I provided to sort of get an additional insight into that. And we're going to see Joe's charts on these. He took some trades on the ones I'm going to show, where we're going to be able to take a look at what he did. He was using 3-minute charts, and so we're going to get a slightly different perspective on the same trading vehicles, and you'll see what a difference 3 minutes versus 1 minute makes. And yet the patterns are all there, and they're fractal. So that'll give you some insights into what it feels like trading on 1 minute versus 3 minutes. So let's sort of get on with that. Okay. So this one is SCO. So this is the ultra crude triple inverse. So starting right from the opening, there was a gap up and then sell off sharply, and then it moved $1 away from the VWAP, and so I just treated that as the minimum manageable risk box. So at like 5-minute low, and it violated the 5-minute low, so I just get short with the top of that box being the risk, and then off we go. Feels good, feels great. My stop should be somewhere. Oops. Yeah, let me get this down in here. Yeah, by this time, my stop should be down around here. Now the green line, green dot's peeking out already, so it makes the RL10 reversal, makes about a 1, 2, 3 reversal. Good exit. Get paid in the first half hour. I love that. Mucks around. Gives me a rollover in the RL10, and then crosses the dragon. So I'm short. It makes a spike down and then reverses sharply, and so I essentially cover and then stop and reverse. Gives me another fractional gain. I was pretty slow on this one. I was waiting for the PSAR to violate. Maybe a 1, 2, 3 would be better. But I don't mind that exit so much. That's kind of like the not later than exit. I was willing to give it a try. I mean, like up until that point, it was feeling okay, and then gave me a second leg down, and I had to get out. So it comes down and finds a higher low. So we have a low, a higher low, a second higher low. 1, 2, 3, RLXD, enter with a stop at the PSAR. Scratch, comes down, makes a slightly lower low, but it's starting to get this kind of sideways choppy channel. So I tried again on the, oil had gotten smashed so much that I was willing to take the inverse long. So I'm really wanting to trade in that direction. Gives me a nice excursion past the VWAP. And in fact, I'm getting ready to make a second entry if it were able to get above this cluster of Z3s, but it doesn't, and then it sells sharply, and I'm just able to escape with a fractional win, and then it reverses sharply again. So now I'm feeling like a yo-yo, but okay, let's try again, and nothing, and let's try again, and nothing. This one felt a little stronger, and I think too much of it get back, but the fact that it had already breached made me stick around a little bit longer. I had to get out when it came back across the VWAP. So I've got about, 1, 2, 3, 4 choppies in a row here in about an hour on about a 15-minute cycle. This is just feeling like oil kind of bottoming out here. It's like at an all-time low. That was the headline on Drudge, but it's like all of the pain and suffering occurred in the pre-market, and there's not much left. So I'm just taking a break, essentially. Now it comes into the afternoon. I'm already liking this now because it's given me a low, a move almost to the VWAP, an orderly pullback, and a reversal. And now the Bollinger Band mean has reversed, and I'm really eager probably by this time to get long. And nothing. It collapsed, tried short, nothing. So I just can't get out of my own way on this one. And then I get long because it crosses the VWAP. I'm just on for the ride, and I finally get paid. So there was a lot of trading inside here. But really, the only thing that made a difference in the the equity was probably this last trade was a clear win. This trade was a clear win on the short side, and most of this other stuff probably nets out to nothing. So not a lot of traction during the day on oil. Most of this was occurring from the big gap, and then there wasn't much more panic to be found, and that actually influenced me when you look at the at oil on the swing trade. Maybe I can, if this will cooperate, I'll show that one real quick. Yeah, so in oil, you'll hear this on the speed run, but I just wanted to highlight this because this is the relationship between intraday and the swing. So on the swing trade in oil, we'd been short in this yellow box. We got short at 444 with about a 30-cent risk. We added a second position on this breakdown. Today, it gapped lower, came up, and then sold off sharply. And so at the start of the day, I'd had my stop here, and I closed that one out, that swing right now. I know it was near the low of the day, but there just was not the feeling of additional panic selling when oil is that low. Like, oil's not going to go to zero. I'm pretty sure that for the next 30 years we're going to be using oil, and it's at an all-time low price. So I just didn't feel like I could squeeze much more out of it. And the intraday move was actually pretty orderly. All of the pain and suffering came from the gap. And the size of the gap was such that I did not want to hold that an extra day on two positions. And so the choppy nature of SCO, which is geared towards this on the inverse, was similar to the choppy price of oil. So I decided not only to just be done with SCO and not trade it in the afternoon, but I also decided to get out of this one while the getting was good. And so there were a number of other swings that were like that today that I had some gains in hand on a couple positions deep, and I just exited those. You'll hear me talk through those in the swing trade speed run that's already posted, so I'm not going to recover that. But I wanted you to see the connection between the intraday trade in SCO and the choppy nature of that, along with the choppy nature of and the bottoming action here in oil. Notice how once that reverses, I didn't want to be on the wrong side of this kind of a big rebound. And with 16 hours until the open, I just wanted to make bank and get done. Okay, so that's the point I wanted to make. So that was oil. Let's see what we got here. Okay, so this one is this is UDOW. This is that triple down. So it had a sharp gap down, made a low, and then started to recover. So I just treated this opening 5 minutes as a range, and that's my minimum manageable risk box. It comes out of there kind of in an orderly. Comes out of there in an orderly manner. The RL10 made a low down in here, so it comes out of here. So I decided to get long with a stop below the belly of the belly of the dragon, like right about there. Starts climbing. By this time, let me get my little my stop light on there. So this is my initial risk. By this time, I've got to get to no lose plus dinner for 2. If it can get above, I'm looking for a second position on this thing. If it can get above like the this declining RL2, that's about where I am thinking about a second position. Somewhere around there. Doesn't do that, so wasn't even as good as my exit here. A little bit of slippage. So these things should go if they're going to go, and when they don't go, cut them. So it rebounds, makes a slightly higher low than this low, finds support at the VWAP, makes the RLXD, so I'm back in, feels good. Target's going to be up here. My exit's going to be down about there for execution risk. And just a PSAR. So if you just track that as a PSAR exit, that's not bad. Gave it some time to run. It really didn't, so nothing there to see. Moving on. I'm noticing the 270 coming down now. Slightly higher hump in the dragon, a series of higher lows. That's not bad to offset the gap downs. The Z3 lines are pinching. VWAP is stable here, starting to get a sideways quiet channel. Now, at some point, we're going to end up getting a super pinch. So you see the RL90 has turned. So if this thing were to keep rolling up into here, and the RL270 rolling down somewhere out, I can't really see that, can you? Somewhere out and about this area, we would expect to see a super pinch developing by that time, unless price is going to break out of this narrowing Z3. Somewhere out in here, we're going to have a meeting of the minds. Oh, and it doesn't wait for me. It just takes off, makes a Z3 breakout. So my stop is going to end up being down here underneath the PSAR, and this feels good already because it's taken out these Z3 lines. That feels good. By this time, I'm probably ready to just lock in again, get my risk out of there. This feels really good because now what we had was the RL10 rolled over, had a 3 minutes of pausing, but higher lows, never even came through the dragon. PSAR is held, takes out the hump of the RL10. So when that RL10 rolls over, to breach that feels good. So that's a good way to get in. Now what I got to do is figure out how to get my risk is going to be up to there now. How soon is price going to move in my favor so I can just get in the money? That's what I'm thinking about on 2 positions. Once I can get 2 positions in and in the money, I feel pretty good. Come on, and nothing. Scratch. It gave me a pullback, deflated. So that's a pretty good exit. The second position scratches, and we're left with this move from here to there, and that feels pretty good. And that's actually better than these 2 legs up. It actually gave a solid leg up, and it feels good for the day. And the RL 270 has rolled up. And the VWAP is improving. So there's more promising. And we're coming into the lunch. And so as it takes off again, like a Z3 pinch, and now it breaks out above the 90 and the RLXD, this feels good. Nice entry. a stop about here. It ends up mucking around. By this time of the day, I've just put that lock in right there through the lunch period. I'm not going to trail it too tight, but if it violates that, then I'm not going to let this thing go to into the red. And we ended up getting I think we got an exit on this one later. No, Richard, this is me making decisions out loud as I'm talking about. There are mechanical style rules you could code these rules, and like where I'm talking about the RLXD, those are pseudo codable. You can code that. I'm using judgment on these. I'm using these patterns to make my decisions, but I'm also using inter-market and intra-market analysis of the other things that are moving in span of control. So I've got 4 or 5 things on my radar that are informing all of these decisions. So I am a mix of discretion and mechanical. But yeah, these are certainly mechanical. You could make these mechanical if you like this style of trading. It's an easy step in to make a strategy into a system, as I discussed yesterday. All right, so this is DIA is going to be basically the same thing, and I just want you to notice how similar these are. It was a little less volatile than UDOW, and so where we got a little bit chopped on UDOW, this one not so much, and so we ended up getting, instead of stopping and then starting, we were able to stay in that one. So just as a point of reference, and then a nice gain, and then again it was that same thing. So this was just a little bit more efficient. This is Simon Property Group. So we have a gap down and then a sell off, and this was basically a hybrid frog short on about $1 off the open. So short with a manageable risk box of just above the where the VWAP opened at, right? So that's going to be about where my stop is right there on the short side. The RL10 rolls over, starts moving up, and I don't want this to go negative, so I take a fractional. So the question was, if it's a mix of discretion, how do I evaluate it as a system? I evaluate it as a strategy, and I have a meta system, which is all of these intraday trades, and I compute them all because they're all of a similar style and a similar nature. It's my day trading system, and I just take the aggregate of all my decisions, and this is my trader quality number. And when I mechanically program these rules so that a robot could trade them, that becomes the system quality number. And then if my numbers are better than the robot, then it makes sense for me to continue to use my discretion. And because my discretion is better than the robotic rules that I can trade, it pays me to continue to develop my discretionary judgment because I get better results than on the robo systems that I can trade. They're positive expectancy, but not as good as my discretionary the discretionary addition. So that's what I mean by the concept of TQN, which is the difference between your robotically traded rules and then the rules as you trade them with discretion. Whichever one of those is better is the way that you ought to trade. So that's how I do it, by R capture. So this one is a fractional gain. It's a stop and reverse when it crosses the VWAP. So our exit on that is down here below the belly of the dragon. By this time, I've got to be at least here on my stop, maybe even better by this time. Maybe just wedge that up a little bit better and lock in the gains. Now, that's a piece of discretion right there. Now, you can decide how complicated you want to make that mechanical rule. How are you going to do that? As a percentage from the max excursion, a 2-bar low? Well, if you look at the the cheat sheet that I talked about on Sunday, I give you about 15 different possible ways to manage exits, all of which can be coded. I'm using just discretion and trader's feel and trader quality number to make my judgments, having seen tens of thousands of these patterns and trading in this way for the last 20 years. So I'm using trader judgment on where I want to put the stop, and a lot of that's based on feeling and intuition, which is nothing more than subconscious pattern recognition. And as I talk these things out, it helps me articulate the rules that I'm using. So this is bad form. I should already be out of this. This is horrible behavior on my part. Very lucky, very lucky. The only thing I can say is this is bad, a bad example. My exit should have been right here, and then with a possible reentry, I would say either here or in here. So this should have all chopped me out and gotten me negative. So I would be satisfied. Well, first of all, I was bad not getting a second position in, and the only thing I can say is because I only had one position in, I was willing to give it a little more room than otherwise. So this should have been a reasonable exit inside there at that time of the day. But nevertheless, I got two positions in. Now it's a Z3 breakout, and by this time my stop has to be right about here now as I'm looking at this. This is kind of like what Glenn was experiencing when he looked at the way his rules feel when he's out of the trade and applying them versus how he actually traded. So I'm not satisfied with the way I traded that one. That needs to be better. I'm getting sloppy on a Monday. Now my stop needs to be about here at this point. So now I'm slightly better than the PSAR, and I want to be like under the skin of the dragon. So I would be happy with that on two positions. Now I've seen one little test of the PSAR. I'm now ready to ratchet that up to here. The RL10 is rolled over. The RL10, the RL30 is rolling over. The Z3 lines are rolling over. This now feels like it's running out of steam. And this is about the same size of this move that then got sideways. That feels like about this move. Horrible. God, this is horrible. I should have been out here or here. Either one of those is still better than whatever I'm going to do next. Oh, God, this is bad. Shameful. However, I now got to forgive myself, and if I find myself in that position, my stop now has to be at the PSAR, and at some point, I'm going to get my act together and trade properly. Good, finally. So that's the wrong way to get three positions into that Simon Property Group. That's just bad examples. Learn from that error. So it paid well, but that was too much risk, in my opinion. I would have been much more satisfied with an exit here, and then an entry with an exit here, and then a re-entry here and a scratch there. I would feel better, more survivable if I had done that. So I give myself about a C- on that trade. Devon Energy. So again, we have a gap down, and then 1, 2, 3, 4, 5 minutes of upward bars altogether. So that's my manageable risk box, and you can see I've started my entry right there. My exit has to be my initial risk has to be here when I'm making this entry. That feels pretty good. God dang it. So 4 bars into it, I'd like to be about there. I want to be here. I want to be there. If I can get above this line, this hump of the dragon right about here, that's about where I want to add a second position. If I can ever get above that blue line. Meantime, I'm just kind of fighting my way north. We've had a nice long run in the PSAR. I've already got, I'm better than the PSAR already on this tighter stop. And this is where I want to get my second position in. So we're really only fighting about this much. That's how much wiggle room there is in that. Ugh, horrible. Should be out. And then this should be a re-entry right about there. So bad form. So I got to forgive myself and then say now my stop has to be here. Ugh. So this should have been an exit anywhere in here. I like the re-entry with a stop right about there. That feels good. So I should be banking that. And especially there's no extra advantage in here. And the only thing I can say is because I don't already have a second position in because I'm stalking it for up here, I must have felt okay on this one. I was not really concerned. Part of it was energy had been smashed so much, and Devon Energy actually was very strong today compared to oil, which just got smashed. It's almost like Devon should really do well if oil gets better. So where oil was down 10%, Devon was down 8% and moving smartly. No excuse for not taking this exit, but that's at the time I didn't take it. Maybe I just kept this one instead. But I would now, in retrospect, I would feel better exiting in here and then re-entering here. So on this one, this is a good re-entry on a Z3 pinch breakout. That's a good initial risk. Good exit. That's at a level where it failed before, so I'm not losing any money on this trade. That feels pretty good. I like the re-entry here. It failed to fail further. It found support at the RL270. There's a PSAR flip. It went from the winter into the spring. I like that entry with the stop right here. I like the second entry. It's because it's above the hump of this RL10 and the PSAR flip. That feels really good. And my stop should now be at least at this PSAR. And as soon as I can, I want to jump it above my entry. So I'm like right about there now. Yeah, good. Now I'm free and clear. And then no matter what else happens, I've got two positions in, and I traded that one much better than the original missed exit inside here. So there's some good learning points in there. But part of this also is forgiveness and getting back to the zero state and getting on with it. Next up is Alcoa. So this one is a gap down, sell off. Here's the manageable risk box. We're right in the middle of it. It makes a sharp reversal when the VWAP starts coming up on huge volume. That's the entry. My stop should be just below the VWAP. Yeah, and this should be here. This should be here. So my stop should my stop here should be at about a 2-bar low on that second entry, which has cleared. It has cleared this previous hump of the dragon. So that's a good second entry. That's a good stop. So I should be here now because I've got my 2 positions in, and that thing's off to the races. And it gives me a 1, 2, 3. So that RL10 rolls up and over. This feels pretty good as an exit. That was much better. And all I can say, maybe on those other ones, because I was focused on Alcoa, it could be why I was sloppy on the other ones. That just tells me my span of control was breaking down. So there's a P1. So now what we have is the unambiguous move, P1. The dragon is starting to roll over. We almost have an RLXD. This could actually end up becoming an owl move back in this direction. This is technically an owl entry right here if I want to take it. I don't want to take it because it was so good that on the upside, that I don't want to get short one of the most powerful movers intraday. I would rather be short something that was already weak. Now I'm suffering regret because that owl entry, what an orderly move. And especially, so if you were an owl here with a stop up here, you're well in the money and you cash a winning trade. I missed it. Can't get them all. Now I'm noticing the Z3 lines pinching. So I'm getting this, what's looking to be a sideways quiet channel along the new fair value. We're about 90 minutes into the day. Z3 lines are really pinching tightly. This now is starting to feel like a nice tight Z3 pinch inside here, inside that channel. This is where that last support level was. So now we're going to see what we got here. Okay, so now I get a Z3 pinch breakout. Shit. Sorry. God, I'm just trying to draw this as a... So there's my, that channeling range inside there. As long as price stays north of that yellow band, then I have a long side bias. So my stop is there, or my entry was there. My stop I like to have like right here at the PSAR, so halfway through the that channeling range. By this time, I need to have my stop here. So I can have this all locked in. Exit. I think that was late too. I should have taken this here. The only thing I would say is that the RL10 hadn't really rolled over yet. And so I gave it a little more room. Then this is a normal exit. Now we got this sideways channeling action happening again. And this is feeling like more of a sideways channel than a runaway gainer. Now what we have is a double bottom. Excuse me. Finding support above this middle yellow zone, and a second RLXD as it's crossing the RL270. I just give that a try with the stop here. Let's see what I'll give it a try. And this ended up scratching a little bit later. Um, it ended up not taking off. It ended up just coming back and grinding out. So there was an initial good response, a reasonable move, and then it just kind of petered out. So there was no real follow through in Alcoa, and the entire XLB series was weak. Okay. Next one. This was an opportunity later in the day. This was Virgin Galactic. There was some negative press on Richard Branson getting a lot of heat for a billionaire asking the UK for a bailout of Virgin Galactic. So I wasn't very much in a hurry to trade that on the long side. But it oscillated between a low and a high, a higher low, a lower high. So you can see now this Z3 sideways channel happening. And it's right on, if you were just to draw this line straight across, 1850 is where it's kind of oscillating. Nothing. And Z3 pinch breakout. So I'm long here. I like that stop like right there, right in the middle of that on the Bollinger Band main. By this time, I should have my stop to here. So my stop should be like a 2-bar low, and I've locked in like no lose plus dinner for 2. That feels pretty good. Starting to roll over, so I want to be underneath right about there. So the RL10 has just started to decay. I've had a 1. This was the peak. This one couldn't make a new high. Started gapping lower. That's almost a 1, 2, 3. Yeah, that is a 1, 2, 3 right there. Hasn't come through the dragon, so I'm going to take the spine of the dragon, I think. Oh, it holds. Very good. By this time, I would not be offended if you took an exit inside here. By this time, where it's crossing the, I better be out of this thing pretty soon. So I'm going to say like right about there. I better be out of this thing. Nope, it came above the RL10. So right on the margin. Now, if this adverse move gets you out because it's an RLXD, then your RLXD reentry is here when it takes out the previous hump. In this case, that didn't take me out, and I put the second position in. So luck. And then shortly thereafter, I get out of that whole position at a slightly fractional gain on the second position. I had a really nice gain working here and held it all the way to the PSAR and gave back most of the second position. So there's that one. Final one. This is just DIA. This is the afternoon trade. So this is after lunch. So we had a gap down and then a grinding upward move. So in the afternoon, it had gone into a sideways quiet channel, then a Z3 pinch breakdown. And so my stop has got to be, let me draw that line. It's got to be about the top of that dragon, like right about there. And then if this VWAP fails, that's where I want to get a second position in. So if it gets through the VWAP, then I want to, it looks like it will have rolled over, okay? Scratch, tried it long, scratch, short, which is basically the same trade as this one, short. Failure to break through. So just bouncing back and forth. That one's working. Now my stop should be like right about here to lock in that gain. And now, if that's my gain, I've locked in this portion. This is how much room I'm giving it to oscillate. And if it breaks below this one, I should be getting a second position in. Yep. And then it reverses against me, and it's still close to the lunchtime, so I don't mind that. I like that it held multiple lows here, failure to fail. It's holding at the VWAP. I'll try it long on a Z3. It's almost getting ready for like a Z3 breakout. So my stop has now got to be like at the PSAR. So that's about where my stop, and that would be a stop in reverse, because that entire dragon, that sideways dragon there would have collapsed. And no follow through, scratch essentially. Collapses through the VWAP shortly thereafter. One position in, two positions in. My stop has now got to be at least here, I would say like right about there. That's a pretty good exit right there. That's like a 1, 2, 3 reversal and lock in that gain. That's pretty good. Re-entry on a collapsing dragon. So now my stop has got to be like at the PSAR flip, like right about there. Collapsing dragon. So you just take this across, collapsing dragon below there, second position in, cash a 1, 2, 3 reversal, and that's it for the day. So pretty good. Better in the afternoon on DIA than on some of those earlier ones. So that's the a quick look at my trades. I give myself about a B- overall. I got sloppy on some of my exits earlier. I want to look at, let's see, here's Joe. Joe put together a series of charts there in the room. This was now Joe played the afternoon trade, so this looks like 3-minute charts. Z3 excursion rolled over and then played short on the break of the RL10, cashed it at the RL90 and what was formerly the PSAR flip. That's a really nice. That's $1.70. That's a 5% move in 15 minutes. Well done. Holy mackerel. UDOW, he was on the 3 minutes. That whole area that was chopping me out didn't bother him at all. He gets one long. His stop holds the whole way. Z3 breakout, 2, 3, and cash. So the third position scratches. That's a good intraday trade. Simon Property Group on the 3 minutes. This feels even much more orderly than the 1 minute. So there's a good argument for this. Owl entry short, perfect exit. Resumption, second position, captures going into the close in the afternoon. You can't trade it any better than that. He gets a fractional here on the like an owl move, and then it just doesn't work, so he doesn't let it go negative. Well done. Devon Energy, he gets the RLXD entry after a hybrid frog off the bottom as it's getting ready to almost enter the summer. He adds a second position in the summer. It holds above the VWAP all the way through, and then he makes a nice exit as summer rolls into the fall. Very well played. Disney, he gets short in the winter, holds it into the spring, and then the RLXD, you can't trade it any better than that. The 3-minute bars are looking pretty good, aren't they? This was Eric in the U.S. Tech 100 rolling cash. He's using 45 points as his minimum manageable risk box. He gets short on the second breakdown, so it's a high, a lower high. He gets short in the pocket. He covers for a fractional win. He gets long on the RLXD, adds a second. I'm sorry, that was his second half of a position, so it nets out a fraction. He then stops and reverses here on a RLXD, plays it half off, second half off, and locks in over an R on the just an afternoon trade in the tech rolling cash. So well done to Eric. So that's everything I wanted to cover. We'll get the movie produced and then uploaded to Patreon for you. The closure report, the speed run for the swing portfolio is already posted to Patreon. That's another 10-minute video, well worth your while. You'll see me taking a lot of preemptive exits on the swings on the long side because this felt like a failure kind of a day, and I wanted to make bank while I could. I did not want to be held hostage to the gap. I'll get the daily reports updated and posted to Patreon here within the hour. So thanks for your kind attention, guys. Take good care. Question, let's see, Victor. Back to oil not going to zero. Yeah, there's a, I don't know how a futures can go to zero unless there was just zero bids. And that could be just for that short-term contract too. So remember, just because one of the contracts has no takers doesn't mean that the price of oil itself. So there could be a momentary anomaly between, the short-term and the longer-term contract as opposed to the price of oil itself. Okay. So yeah, let me get the recording stopped there and then